You ever feel like no matter how much you study, how much you practice, or how many courses you buy, the market still find a way to make you lose? You follow every rule, every so-called pro advice, set your stop losses, use risk management, wait for confirmation, and yet, somehow, the moment you enter a trade, the market turns against you. It's almost like it knows. And here's the uncomfortable truth. It does. See, we were all told the same story, that the market is a place of opportunity, that it's a level playing field, that anyone with discipline, strategy, and patience can win. But what if that's not true? What if the system was never designed for you to win, but to keep you believing you could? Because belief keeps you playing, and your participation keeps the machine alive. To really see how deep this goes, we have to rewind a little to how this system was built in the first place. Let's start with something most people remember, the GameStop event in early 2021. Millions of retail traders from Reddit's Wall Street Bets came together in what looked like a modern-day revolution. The underdogs versus the giants. They saw that hedge funds had heavily shorted GameStop, a dying retail company, betting it would fail. But the internet had other plans. Retail traders united, buying shares, holding them, pushing prices up day after day. It wasn't just a trade anymore. It was a movement, a message. For a few days, the world watched as ordinary people seemed to beat Wall Street at its own game. Until suddenly, the rules changed. Brokers like Robinhood restricted buy orders. Think about that. You could sell, but not buy. Prices started crashing, panic spread, and just like that, the revolution died. Billions vanished from small traders' accounts overnight. Later, when Congress asked Robinhood's CEO why they stopped the buying, he gave the most robotic answer ever. Liquidity issues. Translation: the big players were losing money, and someone had to pull the plug before it got worse. That was the first real moment when millions realized the game isn't fair. The market isn't a free arena. It's a casino where the house controls the outcome. And retail traders? We're just the chips. And that's not just a metaphor. Because every system inside this so-called free market, from the brokers you use, to the charts you look at, to the data feeds you rely on, is controlled by institutions that profit when you lose. You ever wonder why most broker apps are free now? Why zero-commission trading suddenly became a thing? You think that's generosity? No. It's business. Your orders are being sold, literally, to the very hedge funds trading against you. It's called payment for order flow, or PFOF. When you hit the buy button, your order doesn't instantly go to the exchange. It first goes to a market maker, a massive firm like Citadel Securities. They look at your order and millions of others like it, and they can choose to fill it internally or front-run it. They see where the crowd is moving before the crowd moves. They don't need to predict price. They just need to predict you. That's the core of market manipulation in 2025, psychological predictability. Because in the age of algorithms, the data isn't about price anymore. It's about behavior. The system studies you. It studies how you react when a candle fakes out. It studies how quickly you move your stop loss when you're scared. It studies the time of day you usually enter trades, the size of your positions, even how long you hesitate before pressing the buy button. Every micro behavior is data, and that data is sold, analyzed, and used to trigger traps. That's why the moment you enter a position, price suddenly spikes against you, hits your stop loss by 1 cent, then instantly reverses and goes exactly where you predicted. It's not bad luck. It's engineering. Let me give you a simple example. In 2010, the market experienced what was called the flash crash. Within minutes, the Dow Jones plunged almost 1,000 points. Billions were wiped out in seconds. Everyone thought it was a glitch, a computer bug. But the truth is, high-frequency trading firms had quietly pulled their bids, leaving the market with no liquidity. Retail traders panicked. Stop losses triggered. Margin calls hit. And when the market finally hit rock bottom, those same institutions stepped back in, buying everything at a discount. They created chaos, then profited from the recovery they engineered. And that's not the only time. The 2008 financial crisis was another version of the same manipulation, just bigger. Banks packaged toxic loans, sold them as safe investments, then bet against them. When it all collapsed, millions of Americans lost their homes, jobs, and savings. And yet, who got bailed out? The same banks that caused the crash. They broke the economy. and the government paid them to fix it. That's not a system failure. That's a system working exactly as designed. Even today, the same thing happens, just in smaller, smarter ways. When you think you're trading a breakout, the system is hunting your stop loss. When you think you're safe in a support zone, they're using that area to build positions against you. Support and resistance aren't magical lines. They're psychological traps set for predictable behavior. Because here's the ugly truth. Retail traders don't lose because they're dumb. They lose because they're predictable. You're emotional. You panic when price drops. You feel FOMO when price rises. And they use those emotions as liquidity signals. Let's go deeper, because this rabbit hole doesn't end at charts. Have you ever noticed how your feed is filled with trading gurus, flashy success stories, how I made $10,000 in 1 week thumbnails? That's not coincidence. The financial content industry is part of the system. It keeps you emotionally hooked, constantly chasing that one strategy, constantly believing you're just one mindset shift away from success. It's not education. It's marketing. Because hope keeps you trading. Hope keeps you depositing. Hope keeps your account alive for someone else's liquidity pool. And here's something even darker, the illusion of choice. They tell you you control your trades. But think about it. Your chart feeds, your indicators, your order execution, your data, all come from centralized sources. If your broker freezes for 2 seconds, your trade dies. If liquidity dries up for 1 minute, your stop loss slips 20 points. If the server lags during volatility, guess who benefits? Not you. This is what I call systemic asymmetry. They have information before you. They have faster execution than you. They have deeper liquidity than you. And yet you're told it's a fair market. Now imagine you're playing poker, but the dealer can see your cards. You'd never win, right? But here's the thing. You wouldn't even realize you're losing unfairly if they kept you distracted with lights, music, and hope. That's the modern stock market, a casino with better lighting and more data. And if you think crypto is any different, it's not. The same manipulation exists, just with a different mask. Whales pump the price, create hype on social media, attract retail money, and then dump it while you're still celebrating. Decentralized? Maybe on paper. But in reality, the same psychology rules apply. So does that mean no one can win? No. It means you can't win by playing their game their way. You have to understand the architecture. You have to stop trading based on what they want you to see and start observing what they're trying to hide. When you understand liquidity, when you understand that markets move not for direction, but for consumption of emotion, you start to see the manipulation unfold in real time. Suddenly, that fake breakout doesn't surprise you. That sudden stop hunt doesn't scare you. You realize it's not random, it's deliberate. That's when you stop being the prey and start acting like the predator. Because the only real edge left in this market isn't an indicator or a pattern or a strategy. It's awareness. Awareness of how this game is built. Awareness of how your mind reacts. Awareness of what data is being used against you. The truth about market fairness is simple. It's not that the market is unfair. It's that it was never meant to be fair. It was meant to appear fair enough to keep you believing. And as long as you believe it's fair, you'll keep playing. You'll keep feeding the machine. But when you finally see it for what it is, the illusion breaks. And that's when you start making decisions from power, not emotion. Because here's the irony. Once you stop trying to beat the market and instead learn to understand it, you start winning naturally. Not because the game changed, but because you did. You stopped being predictable. You stopped reacting emotionally. You stopped providing free liquidity. And when that happens, they can't manipulate what they can't read. So if you've ever felt that quiet frustration, that voice inside saying, why does it always go wrong when I finally feel confident? Now you know why. It's not you, it's the design. But knowledge changes everything. Once you see the strings being pulled, you can stop dancing to their rhythm and start moving to your own. And that's exactly what we do here on this channel. We don't teach you fairy tales. We expose the truth behind the system. We decode how the markets really operate and how to stop being the product in a rigged game. So if you're ready to stop playing blindfolded, if you want to understand the psychology, the manipulation, the traps, then hit that subscribe button right now. Because here, we don't just talk charts, we talk truth. The truth about how the markets are engineered and how you were never meant to win until now. Stay sharp, stay aware, and I'll see you in the next one.